where things are. And what we know as of today, April 2nd, you know, we did this we did this Tuesday, and by, I don't know, 5 o'clock, 6 o'clock that night, things had changed and we were adding more information. So, all right, I am gonna hide myself. You all know what I look like. Get that out of the way. Okay, so again, Shelley Johnson, just giving you a little bit of an overview of where we stand with some SBA relief today, as of Thursday, April 2nd. So we're going to talk a little bit about what has changed since we talked last. And I'll also give you an overview of the SBA options, because you do have options on what type of relief is out there. And I definitely want to leave some room for questions and hopefully answers. So be sure and chat those into the box. Deanna's helping me as co-host today. So between the two of us, we should be able to cover things. So what are some of the updates that we know since the last time we talked or when this stuff first came out? So if you remember, the law was signed on the last Friday of March, not all that long ago. And on Tuesday, the following Tuesday, Treasury came out with some guidelines. So Treasury actually has some different guidelines on these plans than what is written into the law. So it's going to be kind of interesting to see how all of this plays out. Actually expecting another round of updates maybe today or tomorrow. We don't think that it'll be huge changes, but there may continue to be a little bit of tweaking and hopefully some clarification on a few points that we've been a little fuzzy about. So the good news, one of the things that changed, the interest rate actually dropped. The rate on the Payroll Protection Plan through the SBA is 0.5%, 0.5. So if by chance you're not able to get everything forgiven, the interest rate's going to be very favorable. It was previously 4%. It's a shorter amortization time. The original plan called for as much as a 10-year amortization, and they've come back and made it a 2-year amortization. There is still, I believe, a 6-month deferral on when any payments would need to be made. Interest does run on that time frame. But my guess is that everybody's just going to have a 2-year amortization. They're not going to try and customize these per loan. As far as timing, entities and sole proprietors, those are those of you on Schedule C, with employees, the processing can start as early as Friday. Several of the processors and the major banks are starting to go ahead and gather that information. Some of the other banks are still scrambling a little bit to figure out how they're going to do that. So think about your bankers. Oh my gosh, I mean, we complain about tax season and how compressed and trying to juggle all the deadlines, but you know, here were a lot of bankers that were transitioned to working remote at home and probably juggling kids with the school changes, and then all of a sudden they have days to put this type of program in place. So be kind to your bankers. They've got a lot going on right now as well. So just what is available out there from an SBA loan assistance aspect. And I know everybody and their brother has filled your email and your probably Facebook or LinkedIn feed with documents and updates and things. So I'm going to try and give you the overview without getting too much in the weeds. A big takeaway though, record keeping is going to be vital to getting the long-term best benefits from any of these programs. You've got to have a good payroll system in place. If you've got something that you feel like is a little bit clunky, or it's not something that's easy to be interactive, where pulling off reports and things, then please ask us. We can make some changes to that fairly easy. You also need a good accounting system. We've got some favorites. We can help you get this set up. if you've been working on a spreadsheet or just kind of compiling a list or using a watered down version, this may be a good time to take a plunge and make some changes. You know, and especially if your workload is slowed down a little bit or even come to a halt, it's a good time to put changes in place because you'll have time to get familiar and get things linked and working together. So we'll be glad to help where we can in that area, and a lot of times we get some preferred rates, so be sure and take advantage of our resources as well. All right, enough of an infomercial. So the two current options that are out there, if by chance you haven't caught any of the news over the last couple of weeks, the Economic Injury Disaster Loan tends to be referred to as EIDL. You can apply for that now. It's direct through the SBA. If you were on their site a week ago, it was a fairly, not a long form, it's still a very streamlined process compared to traditional SBA documents, but it's gotten even more streamlined. So there's a couple of screens at the beginning that are just check the box, and then some very basic information on the preliminary side. So it's easy to do these applications. The Paycheck Protection Program, the PPP, this is the one that's getting a lot of chatter. Like I said, most of the banks and the major processors, you can enter the data now, and they will start going through that Friday. Now, that doesn't mean that 8 o'clock Friday morning, your banker is going to be looking at this. It just means that that is their target to get started on the process. Okay. I realize that this is hard to read. It was more to remind me of a couple of points to bring up. So we've got the Economic Disaster Loan here on the left and the Paycheck Protection Program on the right. I believe every state is now covered under the Economic Disaster Loan. Some states started as early as January and others came on board, and I believe now it is nationwide. The Paycheck Protection Program is geared to cover from February 15th through June 30th. There are some limits on the loan amount. The EIDL caps at $2 million. And it's based more on approximately 4 months of your operating cost. I have not seen anything to tell me exactly what that black box formula looks like, but it is roughly meant to cover 4 months of operating. Whereas your Paycheck Protection Program, it is based on your total payroll cost for the last year, and then you get an average monthly. So you take your 2019 payroll cost, divide that by 12, and then turn around and multiply that by 2.5 to get the equivalent of 2.5 months of payroll. And we'll talk a little bit more later what exactly is included in that. There is a cap of 10 million. I think most of our clients are under that part. The interest rates are a little bit different. Disaster is 3.75. And as I mentioned earlier, the big change on the Paycheck Protection, it dropped down to 0.5%. Disaster, the amortization period is going to be determined on a case-by-case basis. It could go out as long as 30 years. Don't expect that. I don't think we're going to see very many in that type of range. So I really don't have a feel for what the time frame will be. If I had to guess, I would say maybe more in the 5 to 10, but that is a total guess. Paycheck Protection, if you're not able to get forgiveness, we're looking at a 2-year amortization. The nice thing about the Economic Disaster Loan, you can actually get a $10,000 grant or advance. The way it's supposed to work is you submit your application online. Again, it's very simple. If you've got your tax return in front of you or you talk to us, we can help you determine those numbers. And then after 3 days, then you have the option if you want to take the $10,000 advance. Even if they determine that you are not eligible for the EIDL, you retain the $10,000. Now, the debt forgiveness is coordinated between the two programs, and I'll talk a little bit more on the forgiveness piece. Collateral, you really only need to provide a pledge or collateral if that EIDL ends up being over $25,000. Payroll, it's simply a check the box that you have been impacted by all of this activity. You're going to have a little bit more information down the road on the EIDL. They're going to be asking, after you've applied, they will ask for a personal financial statement, and they're probably going to want tax returns as well, and probably a list of liabilities. On the Paycheck Protection Program, they're going to, there's no personal guarantee with that piece of it. They will want some follow-up information. So again, be gathering payroll documents at least for 2019. We're a little bit uncertain if you're going to need any payroll from 2020 at this point. So we're just talking about the front side on the application. We're not talking about later on, after we get through that June time frame, there's going to be documentation needed for the forgiveness piece. We've talked about the deferral. Again, you know, you apply direct through the SBA. If you want to make sure you're getting to the right place, on our website, thealmondjohnson.com, there is a big red COVID button, and that will eventually link you over to the SBA site. Let's see. Again, just, you know, key point that these are extremely lenient from a paperwork documentation standpoint. If you've ever survived going through an SBA process, it is very cumbersome. And these are amazingly streamlined and very, very quick. And again, I think for most of the folks that we work with, under 500 employees is not going to be an issue there. So you need to think about, is one of these a better fit than the other for your particular situation? You can apply for both. We'll talk about some things to keep in mind along those lines. And start gathering the information you need. You're going to need the payroll. You're going to need your full-time equivalent head count. That's going to be very important information because that's going to be how your forgiveness is based, on your head count. And you're going to need just some general revenue numbers if you're going through the economic disaster application. Like I said, you can definitely go ahead and truly submit the application on the economic disaster now. And a lot of the banks are starting to take the information for the payroll protection. And we've also got a link if by chance your bank is not participating or for some reason it's just not working out to get with them. We have a link to a preferred SBA lender as well. Later on is when we worry about that maximum deferral on the payroll protection. So you don't have to worry about that part at this point. So again, this is a little bit of a repeat. Get your information together, your payroll records. A lot of the payroll providers have already got a report formatted in their system, so you can pull that information. What is covered on the payroll protection? It's your gross payroll for 2019, plus you add in if the company is paying health insurance benefits and if the company is making a retirement match. And there's one other thing I realize I don't have on here. If you're a for-profit business, the state unemployment that you paid can also get added. That's not a huge amount. It's not going to save you a lot, but it's going to save you just a little bit. So again, it's your gross payroll, it's your health insurance benefits if the company's paying a portion of that. It's the retirement match. So again, just the company expense piece and your state unemployment. That gets added together, divided by 12 times 2.5, and you've got the amount of the potential loan. Now, what about subcontractors? If you are paying someone as a subcontractor, we still need some clarity on this part. Our understanding is that those folks can be included. It's going to be best if you've got the documentation to support that, if they've actually gotten a 1099 miscellaneous. So again, I don't have a real clear answer for you on that. I expect we'll get some clarity today or tomorrow. And then later on, you're going to need your actual payroll tax filings as support, but you don't have to dig those up right now. So the EIDL, the big thing that you need right now is, sorry, I keep messing with this mouse. I'm probably making you guys dizzy. There's a little bit of information in there about current, it's really just current revenue, meaning 2019, and cost of goods, which if you're a service-based business, we usually include payroll as well in that cost of goods. It doesn't, I should have updated this a little bit better. You do not need to know what your current bank account balances and credit card balances are when you apply. Now you're going to need that later on, but you do not need that right now. And in the future, there'll be some requests for payroll transcripts. That's simply a form that you sign, personal financial statement, and schedule of liabilities. So if you feel like these things are cumbersome, you can go ahead and start pulling that together, but you do not need to have that as you apply. Okay. Move my question box over here so we can come back to that. Okay. On to, come on, my slides don't want to move here. All right, no double dipping on these programs. So we've got the EIDL, and we've got the Payroll Protection, and then there's some other programs floating around for some potential payroll tax credits. So the Payroll Protection, it's geared to cover payroll. Your EIDL is geared to cover some of your other expenses. When we talk about the Payroll Protection Forgiveness, you can include payroll, the same cost that we talked about in the initial calculation, utilities, including cell phone and internet, and rent or mortgage interest, not your mortgage principal payment, but your mortgage interest. So it's a little bit broader when we get ready to calculate that potential loan forgiveness. We cannot count those funds again on how we're using EIDL funds. So if you've got a lot of other supplies and services and things in the business, your EIDL money can be used towards those other things. And we need to watch on the payroll tax credit program. There's a couple different components of that. There's the expanded family medical leave. There's also the sick pay. It depends on whether it's the employee, whether they're sick, or whether they just need to be off because of this whole scenario. And then there's also another piece of that, that if your payroll has just basically stopped or been significantly reduced because of the COVID related things, there's opportunity for some payroll tax credits. But if you're doing that, you may not be able to get some of the forgiveness. So that's one of the areas that we're going to have to continue to sort out a little bit. All right, some things that we still kind of have some questions and some unknowns. Multiple entities. Do you both have to apply? Looking at the application, at least the preliminary version 1 application, I think so, but there does appear to be a disclosure if there's common ownership with other entities, and 20% is kind of that threshold on when they determine they want information on the individual owners. And rental real estate, a lot of people or entities that manage rental real estate don't necessarily have employees. The EIDL does have a place on there about lost rental income. So I would expect some coverage there, or if we get a little bit of clarification on the subcontractor piece, that might apply as well. I'm looking here at my slides because I thought I had another point I wanted to make, and I'm wondering if I left that someplace else. We talked about the sole proprietor. The sole proprietors with employees can apply now. If you're an independent contractor and you don't have other employees under you, then you could be you could apply later. So a couple questions that came in. This was around an S Corp with payroll. So again, they have, it's the subcontractor issue, someone who works periodically and is paid as a subcontractor. So we do believe that there is an element in there to include casual labor along those lines. The part I'm a little fuzzy on is how that headcount is going to work, because on the payroll loan forgiveness, there's a couple components around qualifying for that forgiveness. One piece of it is what was your head count prior versus your head count June 30th. So if by chance you're furloughing employees or you're reducing employee wages, the goal is to have those back up to pre-COVID ratios by June 30th. The other component of getting that debt forgiveness is at least 75% of what you're requesting for the forgiveness has to be direct payroll related expenses. So your rent, your utilities, and the mortgage interest, those cannot be more than 25% of that forgiveness request. And owners qualify. If you're an owner taking out compensation through payroll, then yes, you are included in that payroll account or request. Any individual, regardless of ownership, that is above $100,000 a year in payroll, their cap in the calculation is $100,000. So there are some that may have to be adjusted and bring that down a little bit. So another question was related to, make sure, okay, using your business line of credit as opposed to applying for the payroll. So the PPP, or the Payroll Plan Protection, it has a debt forgiveness element to it. I think that's probably the biggest bonus. You know, if you've got resources such as a business line of credit that is at low interest rates as well, that's certainly a way to tap into cash. But there's not going to be the loan forgiveness piece on your personal debt like there's going to be with this SBA program. So I think that's where you need to weigh the decision on what you would like to do there. Okay. And I think there was another, so the payroll tax credits, it's an area that I have looked at several times and tried to get my hands around, and then we got into these deadlines of having to get some of this SBA stuff together. So I am not 100% versed on how those payroll tax credits are going to work. I also am pretty confident that the payroll services and the IRS reporting components of payroll are not ready to handle that. My understanding was if they're off under the expanded family medical leave, or if they're off under the sick pay, that payroll didn't really start counting until April 2nd, which is today. So that's going to be a second quarter payroll. So I think we'll have some clarity down the road. Some of those credits are refundable. So if by chance the payroll that you're paying out and the credit that you're eligible for is more than the payroll taxes that you would remit, then there is to be a form where you can request a rapid refund. I have not seen that, so I don't really know the rules yet on the payroll piece. There's another component of payroll credits where if you've just had to reduce staff, not necessarily because they were sick or because they qualified under the expanded medical leave, but just in general, all of the slowdown everybody is feeling, then there's a 50% payroll credit on that. But we want to be really careful, because if if you start down that road, you may trip yourself up on getting some of the payroll protection plan forgiven. So we're going to have a little bit of time to figure that out because, like I said, you know, some of these payroll credits aren't going to, we're not even going to figure out how to tap into that benefit for, I would guess, a couple more weeks. So don't panic. This is an opportunity where we can kind of help you evaluate what's going to be the best for you. So these loan forgiveness is not taxable income. A lot of times you'll hear debt forgiveness is taxable income, but these are not going to be taxable income, so considered more like a grant. However, we won't be also expensing the related expenses. So if you're able to get that payroll protection as a if you're able to get the forgiveness on the payroll protection, then we're also not going to have as big of a payroll expense deduction. So we'll work all that out. That's a this time next year type of scenario. But you won't be paying tax on the money you get, but you're also not going to have as many write-offs as normal. So okay, so I think I just answered that question. Are there any other questions? My goal was to run about 30 minutes, and gosh, it looks like I'm actually going to be relatively close to being on time. So we are set up. If we've got access to your reports, access to your payroll, we can certainly help either calculate those numbers for you or look at what you've calculated. We're glad to do that. Trying to kind of carve out time here in the next couple of days to do that. It's like anything else when it comes to the government being involved. You ask 10 people and you're going to get 5 answers going this way and 5 answers going that. I have heard that there is a cap on these funds, so everybody wants to get in line. I've also heard that there should be plenty to go around because the banks are actually using some of their available funding because they're getting the SBA guarantee on it on their side. So I don't have a clear answer on that. I do think the one thing you're going to watch though is that meter starts for the loan forgiveness from the date the money hits your account. So we've got 8 weeks from that date. If you furloughed employees or you're not able to open because we're still under a stay-at-home order, then you're losing ground on getting that money forgiven. So that would be a reason to wait to apply for the payroll. But then again, if by chance there is they truly do cap it, it may not be available. I did hear through an interview with the AICPA that the amount of funding they put into this bill was truly based on what they thought it would take to keep small business payroll across the country going for 8 weeks. So it wasn't just a number out of the air. Question about unemployment. Our understanding is that self-employed do or will qualify for unemployment benefits. The problem is, and we did talk to someone that went down that was in that scenario, and payroll doesn't show any unemployment earnings for them because when we file that return, and even though you may be paying self-employment tax on it as either a Schedule C or an active partnership LLC, you're not paying state unemployment tax on your self-employment earnings. So they don't have any records of you earning like Social Security does. Our understanding is the federal side is stepping in with funds to bridge that gap. Paperwork has not caught up with it. So we're going to keep our ears tuned and see what, best case. I honestly don't know whether it's better to tell you to go ahead and apply now and at least kind of be in the system or wait till there's a little bit of clarity with that. But there is supposed to be federal money coming to bridge that gap. And furloughing and shutting down unemployment, especially for your employees, I mean, that is a very viable option to consider. That is a way to get cash to your employees without it coming out of your pocket. But again, the key piece on applying for the payroll protection is going to be bringing them back full speed by June 30th, because if the headcount's reduced or the gross payroll's reduced, you may not get full loan forgiveness. So very good questions, everyone. And if you have questions around that scenario of laying them off versus applying for the PPP, get with us, schedule a time to let's have that conversation one-on-one, because you know, there's a lot of nuances. I think the downside of going the unemployment route is, will you get your team back? My understanding is if you furlough them, and again, state unemployment is on a state-by-state basis, so it could be a little bit different depending on where you're located. But my understanding is if you give them a furlough date of, you know, June 29th, because we want to have that magic June 30th date, and they do not opt to come back, then that can impact their benefits. But I am not a specialist in unemployment or HR by any means. So please, a lot of these departments have frequently asked questions on their websites. So I'll be glad to help you talk through it and evaluate and offer my 2 cents, but certainly do not just rely on what I'm saying from that piece. So. Right, I think we've got some more questions down here. Yeah, I think we just talked about if they don't want to come back, yes, it could affect your forgiveness if they do not come back, or if you're not able to replace them. That head count does not have to be the same employee. They're just looking at were the same number of jobs filled, and are they being paid fairly close to what they were being paid before that time frame. So. I want to thank everybody for taking time to listen. I hope it's been helpful. Please feel free to schedule time with us. You know, we're kind of tempering the 1040 work right now because we want to be available to help your businesses and to see you through this on the other side. So let me make sure there's not one more question in here. So yes, thank you. Everybody stay well, please.